हेलो फ्रेंड्स, वेलकम टू माय चैनल इन कोचिंग सेंटर। आज मैं एक्सप्लेन करने जा रहा हूँ आपका चार्टर्ड अकाउंट्स का 9th चैप्टर या फिर 8th चैप्टर भी कह सकते हो वो है। और चार्टर्ड अकाउंट्स का जो पहला टॉपिक है प्रिंसिपल्स ऑफ अकाउंटिंग, उसका 8th चैप्टर इंडियन अकाउंटिंग स्टैंडर्ड्स। तो इंडियन अकाउंटिंग स्टैंडर्ड्स इट हैज 4 टाइप्स: convergence towards global standards, transparency of financial statements, comparability of financial statement, enhanced disclosure requirement. So, need for convergency towards global standards. The last decade, it has witnessed a change in the global economic scenario. It has more changes happened in the last decade. The emergence of transnational corporation in search of money, not only for fueling growth but also for sustain ongoing activities, has necessitated raising of capital from all the parts of the world, cutting across frontiers. The capitals of all the country are going to grow from few decades. Each country has its own set of rules and regulations in the accounting and financial reporting. Every country has its own rules. Therefore, when he decided to raise his capital from the market other than the country in which it is located, the company is located, other than that, when he decides to raise his capital from the market, the rules and regulation of the other country will apply. For if he in India he has one head office and he want to open another branch, he want to open a head office, he had to open another branch in USA, then he has to follow the rules and regulation of doing business in the USA. Then he has to follow the rules and regulations of the country that will apply, and this in turn will require that the enterprise is in a position to understand the difference between he should understand the difference between the rules governing financial reporting in the foreign country as compared to its own country of origin. In his own country, there is difference in some financial there is different rules and regulation in their country for doing the accounting or running their business. So that's why you should follow the businessman should follow the country's rules and regulation to open his branch in that country. Next, therefore, translation and reinstallment are utmost important in a world that is rapidly globalizing in all this. So, translation and reinstallation, as you know, a company has its branches more than in many countries it has. So, as global is growing, it is rapidly globalizing the country. So, in anyway, it is important to the world. For this, reinstallment is very much important in themselves also. The accounting standards and principles need to robust so that the larger society develops degrees of confidence in the financial statement which are put forward by organization. They may take some of them degrees of confidence in the financial statement. So international analysts and investors who would like to compare the financial statement based on their similar accounting, based on similar accounting standards, international analyst and investor would like to compare the financial statements. So, and this has led to growing support for international accepted set of accounting standard for cross-border filing. So this has made importance of international accepted set of accounting standards in the cross-border filing. The harmonization of financial reporting around the world will help to raise confidence. They will help to raise. It will help the investor to get more confidence generally in the information they are using for making their decision, assess their risks also. It may help. Also, a strong need was, and it may give more information for them, and also a strong need was felt by legislation to bring about uniformity, rationalization, comparability, transparency, and adequate and adaptability in financial statements. Having a multiplicity of accounting standards around the world is against the public interest, and if accounting for the same events and information produces different reporting numbers, if the accounting of that information produces different reported numbers depending on the system of standards that are being used by that company, the standards they are using, accounting standards, then it is evident that accounting will be increasingly discredited in the eyes of those using the numbers, of those who are using the numbers. It creates confusion, encourage error, and facilitated fraud. It creates again little bit problems. The cure of these ills, for these problems, the cure is to have a single set of global standards, to have only one global accounting standards of the highest quality, with an highest grade rules, and set in the interest of the public, and that are set in the interest of the public. Global standards facilitates it makes cross-border flow of money, global listing in different bourses, and comparability of financial statement. These all the help it does. But the convergence of financial reporting and accounting standards is a valuable process. It is a valuable process that contributes to the free flow of global investment of the investment. The globally anyone can invest their money and achieve sustainable benefits. They can achieve their benefits for all capital market stakeholders. They can take their benefits, and it improves the ability of investors to compare their investments on a global basis. On the basis of their globally, they can compare their investment and on global basis, and thus they can take the lower risk or errors of judgment. So they can take low risk by taking a good judgment or taking good decision. So it facilitates accountings and reporting for companies with their global operations, and eliminates some costly requirements. Say reinstallment of financial statement eliminates some of the important, means costly, it may become costly for them, it will remove that. And it has a potential to create a new standard of accountability. It has some potential and greater transparency, which are valuable for of great significance in all market participants, including their regulators. So for the companies with a joint listing in both domestic and foreign countries, the conversion is very much significant. International financial reporting standards as global standards. So with a view of 1 minute. Okay. So with a view of achieving convergence towards global reporting, the London-based group, that is namely the International Accounting Standard Committee (IASC), who is responsible for developing international accounting standard, that was established in June 1973, and it presently is known as the International Accounting Standard Board (IASB). It is not committee; it became board now. And the IASC comprises the professional accountancy bodies of over 75 countries. It includes the Institute of Chartered Accountants of India, ICAI also it includes, and primarily the IASC was established in the public interest. It was established to formulate and publish international accounting standards that should be followed in the presentation of audited financial statements. They brought the international accounting standard. International accounting standards were issued to promote the acceptance and observance of the international accounting standards in worldwide. It could be followed like that. They have brought it in the regulation, and the members of IASC have undertaken a responsibility. They have taken responsibility to support the standards promulgated by IASC and to propagate those standards in their respective countries, to propagate that. Between 1973 and 2001, the International Accounting Standard Committee (IASC) related international standard accounting standards. Between 1997 and 1999, IASC restricted their organization, which resulted in the formation of International Accounting Standard Board, and these changes came into effect on 1st April 2001. The IASB came. Subsequently, IASB issued statements about current and future standards, and IASB published its standards in a series of pronouncements. They called it as International Financial Reporting Standards. However, IASB has not rejected the standards that are issued by ISAC. Like that only, those pronouncements continue to be designed in the International Accounting Standard. The IASB's accounting standards continued in the International Accounting Standard. The term IFRS, that comprises IFRS, is issued by IASB. IAS, that is issued by International Accounting Standard Committee, IAS, and interpretation issued by the Standard International Interpretation Committee and IFRS Interpretation Committee of the IASB. It is made. So International Financial Reporting Standard, IFRS, are considered a principle based set of standards. So it International Financial Reporting Standard, it has some of the principle based set of standards. In fact, they have established a broad rules rather than dictating specific treatments. By giving some small treatments, they have not gone, they have made more rules. Every major nation is moving towards adopting that rules, and large number of authorities requires public companies to use this IFRC for stock exchange listing purposes. For the stock exchange listing purposes, they have to use this International Financial Reporting Standards. And in addition, banks, insurance companies, and stock exchange may use them for their statutorily required reports. For their reports, they may use that. So over the next few years, thousands of companies will adopt the international standard or International Accounting Standard, IAS also we can say, and this requirement will be about 7,000 enterprise, including their subsidiaries, equity investors, joint venture partners. The increased use of IFRS is not limited to public company. It is not limited to for public company that are listing requirement or statutory reporting. Many lenders and regulators and government bodies are also looking for to IFRS to fulfill their local financial reporting obligation related to their financing and or licensing. So many government bodies also using IFRS for their financial reporting obligation. Benefits of convergence with IFRS. There are benefits of converging with IFRS in whether it may be economic benefits, industries, many other benefits. So the economic benefits while convergence with the IFRS International Financial Reporting Standards is when the market expand globally, the need for convergence since the convergence benefits by the benefits they have given, the economy by it may increase. When the market expands globally, the convergence will increase, benefits will increase for them, and economy by increased growth of its international business. As the economy will also grow, as there will be growth in the business, it facilitates maintenance of orderly and efficient capital markets. For it maintain orderly and efficiently capital market, and also helps to increase the capital formation and thereby economic growth also it helps. And it encourages international investing and thereby leads to more foreign capital flows to the country. For more foreign capital flows to the country, more money for the country also it will bring. Next is investors, how it helps to the IFRS. How it helps to the investors is convergence. How it helps to the investors is a strong case for convergence can be made from the viewpoint of the investors who wish to invest outside their own country. They will give more opportunity for the investors who want to invest their money in the outside of the country in any other company. Investors want the information that is more relevant, reliable, timely, and comparable across the jurisdiction. They want some information what they need that will be save the time, reliable, and their comparability more relevant. So finance statements prepared using a common set of accounting standards. By using the International Accounting Standard, the finance statement prepared by them help the investor to better understand their investment opportunity. They may also get the idea in which company they should invest and why we should invest opportunity, and that are by this financial statement they will get why to know why we should invest. Will we get profit, will we get earning or not. And accounting standards that are used globally, they are accepted. Investors confidence is strong. Investors confidence will be high when they use the accounting standard globally that are globally accepted. So therefore convergence with IFRS contributes to investors to understanding about their financial statement of the that company in which they are investing the money, in which they are investing their money for to understand their situation, it may the convergence with IFRS helps. Next, the industry. So a major force in the movement towards convergence has been the interest of the industry. It is the interest of the industries. The industry is able to raise their capital from foreign markets. Industries may raise their capital from the foreign market at low cost, and if it can create confidence in their minds of foreign investors that the financial statement of that industry will comply with a globally accepted accounting standard, if their financial statement will continue with the global accounting standards. With the diversity in accounting standard from country to country, enterprise which operates in different countries face a multitude give a accounting requirements privilege in their country, and the burden of financial reporting is lessened by this convergence of accounting standard, because it simplifies the process. It makes easier the process of preparing the individual and group financial statement. It makes easier of that industry to prepare the individual and group the financial statements, and thereby reduces the cost of preparing the financial statement. By using their sets of accounting standards, it may help their accountants to make easily note which topic we should take, which amount we should take, which not we should take. It will help them. So that's why it is important for industry also. Next, development in Indian accounting standards. Indian AS. First step towards IFRS. So the Institute of Chartered Account of India, ICAI, it has been the accounting standards that are standard setting bodies in India. So it has been setting the accounting standards for India from 2006, and initiated their process of moving towards the International Financial Reporting Standards, IFSR, and that are issued by the International Accounting Standard Boards, IASB, with a view of enhancing accessibility and transparency of financial information, that company's financial information, with the idea to help their company's financial information to know about their investors, and for growth of their company, and communicating the Indian corporates through their finance statements. So the international investors can communicate the Indian companies with their financial statements. They can cooperate with or communicate with each other. This move towards IFRS was subsequently accepted by the Government of India, or Government of India has accepted this move. The Government of India, in consultation with ICAI, they decided to converge and not to adopt IFRS that are issued by IAS, but their decision of converge rather than adoption was taken after they have detailed analysis of IFRS. Requirement and extensive discussion with various stakeholders. After the extensive discussion of the various stakeholders, they have took a decision of making ICAI, Indian Institute of Chartered Account India, and according to formulating IFRS converged Indian accounting standard, efforts have been made to keep these standards. Effort has been made to keep the Indian accounting standards, and as far as possible in line with the corresponding IFRS, and departures have been made where considered absolute essential. Absolute essential of that company, and these changes have been made considering various factors. These changes have been made by taking various factors, like various terminology that are related to change have been made to make it consistent with the terminology that are used in the laws, also the terminology that are used in accounting laws also. Next, certain changes have been made considering the economic environment of the country. Certain changes have been made which is different as compared to the economic environment in the IFRS. So next, after that, what are Indian accounting standards? So Indian accounting standard, you can say IAS or India AS, are the international financial reporting standards. Only, but they are converged standard that are issued by the central government of India. and under their supervision and control of the Accounting Standard Board ASB of ICAI of Indian Chartered Accounts Institution. They under that they have a control board, that is Accounting Standard Board, and they have taken some of the controls and supervision, some of the decision. By them we have got the accounting standard for India, and in consultation with National Advisory Committee on Accounting Standard NACAS also have taken some of the decisions, and National Advisory Committee on Accounting Standard NACAS, they have recommended these accounting standards to the Ministers of Corporation Affairs MCA. MCA has to spell this accounting standard applicable for all the companies in India, whether whichever company it may be. This accounting standard will be applied to all the companies that are in India. The MCA, the Minister of Cooperative Affairs, they have spelled out the accounting standards. The Indian accounting standards are named and numbered in the same way. They are named and numbered in the same way that the Indian accounting standards are numbered in the same way as the International Financial Reporting Standard IFRS are named named in the same way the Indian accounting standards are also named. Government of India Committee of IFRS converged into AS. Initially, Indian accounting standards were expected to be implemented from the year 2011. They are thought to implement from the year 2011. However, keeping in view the fact that certain issues may include like tax issues were still to be addressed, and the Minister of Corporation Affairs MCA decided to postpone the date of implementation of the Indian accounting standards, and in July 2014 the Financial Minister of India at that time, Shri Arun Jaitley, in the budget speech announced the urgency to converge the existing accounting standards with the International Financial Reporting Standard. Arun Jaitley has decided in Arun Jaitley has said about the Indian accounting standard that will converge with the International Financial Reporting Standard IFRS through adoption by making new Indian accounting standards for the Indian companies with the help of Indian companies also. We have taken for making Indian accounting standards, we have taken some of the advices from the Indian companies also. So, pursuant to the above announcement, various steps have been taken to make the for implementation of International Financial Reporting Standard that are converged as Indian. They are converged as Indian Accounting Standard, Indian AS or IAS. Also, you can say some say Indian AS in starting in last chapters you learned as IAS, Indian Accounting Standards. So moving in the direction, so IAS, Indian Accounting Standard. Okay. Moving in this direction, the Minister of Corporation Affairs MCA, they had issued the companies Indian Accounting Standard rules. They have issued the Indian Accounting Standard rules in 2015. Wide notification dated from February 16, 2015, covering the revised roadmap of implementation. They made the how to implement the Indian accounting standards for companies other than banking companies, living insurance companies, and NBFC, and Indian accounting standard. As per the notification, Indian accounting standard they converge with the International Financial Reporting Standard. They already announced in the budget speech, but how to bring it into the existence? Well, that was a problem. Next, IFRS shall be implemented voluntarily. Then they think with the Indian accounting standard with International Financial Reporting Standards that will implement voluntary basis from 1st April 2015, and it will be mandatory till 1st April 2016. Later on, in 2016, MCA notified roadmap for making the NBFC. They announced the implementation date for Indian accounting standard, and similarly Bank and Insurance Regulators Authority, they have issued separate roadmap for implementation by their ideas how to implement the Indian accounting standard from banking insurance companies respectively. And by these things we got the Indian accounting standards. Our accounting standards we have got list of and a list of Indian accounting standards. Indian Accounting Standard 101. The first one was the first time adoption of Indian Accounting Standard. 102 was share based payments. 103 was business combination. As you know, Indian Accounting Standard, there will be number. They will give similar in starting explanation. I said the Indian Accounting Standard, the number for that will be equal to the Indian International Financial Accounting Standards, International Financial Reporting Standards. Sorry, it will be similar with like that only. Similar, it will be little bit. The numbers will be, and so Indian Accounting Standards, that is 104. It will be insurance contracts. Indian Accounting Standard 105, it will be non-current asset that are held for sales and discount operations, and 106 will be the exploration for and evaluation of mineral resources. 107 will be the financial instrument disclosures. 108 will be the operating segments. 109 will be the financial instrument. 110 will be the consolidated financial instrument statements, and 111 will be the joint arrangement. 112 will be the disclosure of interest in other entities. 113 will be the fair value measurement. 114 will be the regulatory deferral accounts. 115 will be the revenue from contracts with customers. 116 will be the lease. The first one will be the presentation of finance statement. Second will be the investors, and the Indian Accounting Standard 7 will be the statement of cash flow. Indian Accounting Standard 8 will be the accounting policies, changes in accounting estimates and errors. Indian Accounting Standard 10 will be the events after the reporting period. Indian Accounting Standard 12 will be the income taxes. It contains rules about income taxes. Indian Accounting Standard 16 will be have information about property, plant and equipments. Indian Accounting Standard 19 will have employee benefits. Indian Accounting Standard 20, it will have accounting for government grants and disclosure of government assistance. Indian Accounting Standard 21, it will be the effect of change in foreign exchange rate. Indian Accounting Standard 23, it will have the borrowing cost. Indian Accounting Standard 24, it will be have related party disclosures. Indian Accounting Standard, it will be having Indian Accounting Standard 27, it will have separate financial statement. Indian Accounting Standard 28, it will have investment in associates and joint venture. Indian Accounting Standard 29, it will have financial reporting in hyperinflationary economics. And the Indian Accounting Standard 32, it will have financial instruments presentation. Indian Accounting Standard 32, it will be have earning per share. Indian Accounting Standard 34, it will have interim financial reporting. Indian Accounting Standard 36, it will be have impairment of assets. Indian Accounting Standard 37, it will have provision, contingent liability and contingent assets. Indian Accounting Standard 38, it will have intangible assets. Indian Accounting Standard 40 will have investment properties, and Indian Accounting Standard 41, it will have agriculture. So note the list of Indian Accounting Standards given above does not form part of syllabus. It is not a part of syllabus. It has been given here for your knowledge. For your knowledge, it is not any part of your syllabus. To know about this little bit information to get for your little bit information for you, they have given this. It is not a part of the syllabus. Okay. So here you have some of the questions. You can see. So this was your last chapter of your first part, that is principle and practice of accounting. This first part's last chapter. The next part is there. Next part of accounting. There you will learn still more chapter. There are 7 to 8 parts in that. The first part part 1, that is the principles and practice of accounting. It has more chapters, almost 8 chapters this one. And next it has a little less. Some have 4, some have 2, some have only one chapter, like that. So this one was the big, and this chapter I have completed, means this part 1, principles and practice of accounting, I have completed. I have also completed Indian Accounting Standards also. This chapter also I have completed. So okay, I think you understand this chapter. Here you can see some of the questions they have given, theoretically based questions, some of the MCQ questions you can see for your test, for your knowledge, for what you understand. True or false also they have given, and also they have given here more true or false, more questions, like MCQ questions they have given, and they have answered also. Here you can see answer. So for seeing this answer, leaving this, you only try to solve. I will show here, but don't see these answers. First you solve the things and questions they have given, whether it is true or false. From your view, what you understand, you will know. Then you can see the answer, whether it is correct or not. First you tell the answer whether it is true or false, then you can check that answer, where you write that answer in a sheet, whether it is true or false, what you think about that. Then you check it in this down now I showed, so that you will know whether you have understand it or not. So okay friends, this was the over of your part 1, the principles and practice of accounting, or introduction of accounting also is here. It is part 1, it is over. Next part 2, in my next video I will start part 2 chapter videos I will make in my next upcoming videos. So part 1 all chapter is over, and I also think you will understand all the chapters, and this was the last chapter, Indian accounting standard, and this chapter also you understand, I think so. So okay friends, I will see you in my next video explaining the another chapter. So till then, take care, have a nice day, and bye my dear friends.